Hi everyone. Hope everyone's well. Having a good week so far. So I wanted to do this particular webinar on the budget and how it's going to affect everyone. So if there's any problems with any audio, guys, I'm doing it on a new device, a new headset. So if there's any issues with any audio, just let me know. So in regards to the budget, it was announced a number of weeks ago of the changes that would take place. We had a big influx of calls straight after in regards to how it affects them. One of the biggest ones that we had actually was in regards to corporation tax and the rises there. But again, when we sort of drill down into the details, it doesn't actually impact you too much, and there's obviously ways around that. So wanted to run through how it's going to affect things in regards to obviously stamp duty, what it's done so far, and then we can start to sort of talk about what it means for you personally. So first of all, the most important thing is that what everyone was looking at was the stamp duty and would it be extended. So stamp duty was originally, or stamp duty holiday, I should say, was originally placed on last year. And there was a big concern due to the fact that solicitors are taking so long at the moment to exchange on transactions. There was a big concern that there was going to be this what's called a cliff edge come the end of March. Now the reality is that there wouldn't have been a cliff edge anyway for the average house price. Around the £15,000 saved if you deal on a £500,000 unit. I do appreciate that at that level, if you're buying a £500,000 unit and a day later it's cost you 15,000 more, that is where there's going to be a cliff edge. But the majority of the transactions that are actually going through are around about the £230,000, £240,000 mark. The extra is only about £1,700. So at that level, you're not going to suddenly stop a purchase due to an extra fee of £1,700. What would typically happen is you'd probably find that that would be split between buyer and seller, or something like that would take place. But I do agree that around the £500,000 mark, there would have been some form of cliff edge. So what the Chancellor announced is announced a slow relief of the stamp duty holiday. So it's slightly convoluted, but effectively, they've given a stamp duty holiday fully until the end of June. However, come July, there's still going to be relief on any properties up to 250,000. So again, if you're buying something which has an average house price here in the UK, then you're going to still get relief of up to 250,000. So this affects both residential buyers and buy-to-let purchasers, because the buy-to-let, and this is what some people didn't realise, is that although that there's not a holiday on your buy-to-let purchases, because there's a holiday on your residential purposes, the buy-to-let side of things, you're only paying 3% over the base rate. So if the base rate is 0, you pay a flat fee of 3%. So whereas typically after 125,000, that jumps up, the base rate jumps up to 2%, therefore the buy-to-let rate jumps up to 5%. Because that base rate is still 0, you pay 3% across the board. The majority of people don't buy buy-to-lets around about the £500,000 mark, just simply because they don't make the kind of yields that is expected. So the majority of people looking at the buy-to-let will have an extension, obviously, until the end of June. But beyond that, that's going to head to the end of September as well. So as long as we're under that 250,000 threshold, then we've got until the 1st of October, essentially, which is great. Now that's buoyed the market as well. We've seen a big influx of inquiries coming through, and again, we expect that to continue. And even beyond October, because of the rates where we're at, we expect that the growth to still be continuing. Obviously, we don't expect the rate of growth to be as high as it has been. We expect another sort of 6 months of the kind of rates that we've had over the last 12 months or so, which is around the 5 to 6% in the north of England, especially in the northwest. But overall, I would say that we would still expect a steady market after October of this year. So after October, things will return to normal. Now, there has been a lot of questions asking, will they extend it again? No, 100% not. We, as I say, a couple of webinars ago, including the last one we did, we guesstimated that they would extend it. However, do I think that they're going to extend it again after this? Certainly not. I think this is D-Day now. This is it, basically. I don't feel they're going to put any form of extension on whatsoever. So that's the first thing. Secondly, what I would basically say to people is another big impact that we've had is the actual mortgage rates. So as we head into the mortgage rate side of things, the government announced that the 5% mortgage rate, they're going to want to push more first-time buyers onto the ladder. Now, first-time buyers are key to the property market. Without the first-time buyers, the market doesn't move forward because everything becomes static. So if you've got a property which you purchased, now let's say you purchased a 1-2 bedroom apartment or a 1 or 2 bedroom house, and you're looking to go up to the next stage. So you've now looking to go to a 2 or 3 bedroom house or 2 or 3 bedroom apartment and move on. You can only do that if someone comes along and buys your house. Now, if first-time buyers aren't coming along and buying that particular property, then it's not going to work. You can't move up that ladder. So without first-time buyers, the whole ladder stops. It's like a domino effect, essentially. So the fact that they're putting 5% mortgages on is, in my opinion, much bigger and much more potent than the stamp duty, because 5% mortgages allow first-time buyers to jump on the market. The more first-time buyers get on, it means that the previous batch of first-time buyers can move on to become second-time buyers, and the previous second-time buyers can become third-time buyers, and so the process goes on. It means the whole property market, everyone can go up the ladder, so to speak. So I think that after October, although things are going to return to normal in regards to the stamp duty side of things, I think we're going to see a big push in terms of the growth from those 5% mortgages, as long as they bed in okay, because we've seen a lot of times when things like this have been announced before and they don't actually follow through. They don't actually go through to the lenders, and lenders still make their own rules up essentially. But as long as we can start to see those 5% moving on, then we're going to see a big continuation of the growth that we've seen over the last 12 months. But the big thing for me about the 5% mortgages is it going to feed down to the lenders? That's key with this, but only time will tell. Now, in terms of the corporation tax, again, a lot of you have been contacting us and asking about the corporation tax, how they're affected. Are they going to suddenly have huge tax bills at the end of the year? Well, with corporation tax, you only get taxed on your profit. This is something that is key. It's not as if you get taxed on your turnover, you get taxed on your profit. So if you've got income coming in of £10,000, for round figure sake, and you've got money going out for wear and tear and mortgage rates and management costs, again, that starts to whittle down your profit. And that's the difference between doing it in a personal name or a company name, is when you do it in a personal name and you're taxed and you get £10,000 income, you're taxed on that £10,000, regardless of the fact that you've got outlay to make. In a company, the outlay gets done first of all, so you spend your money on what needs to be done, and then you get taxed on what's left. Now, what they're now saying is that they're going to rise corporation tax to 25% over the period of a number of years for all businesses who make more than £50,000 profit. Now, on average, they've worked out that you need in the region of sort of like 6 to 10 properties in your portfolio to get to that level. So if you've got 6-7 properties making £10,000 a year on that, so you've got £60,000 to £70,000 coming in. Of course, you're going to have costs to that. By the time you take out your costs, you might be left with sort of 45 to 50,000. So you're not going to have to worry about that higher rate of tax. So it's unlikely to affect any property company because on average, people don't have more than sort of 6-7 properties in their portfolio. However, we have spoken to an accountant, and one accountant has just simply said what they will do is that they will, once people get to 4 or 5 properties, then better to be safe than sorry, they will go and set up another company, and then you can go and set up another company with another 4 to 5 in it. There's that way around it as well. So overall, these 3 things have had a positive impact for the property market, because the corporation tax hasn't affected it. The extension of the stamp duty has been extremely positive, and of course the 5% mortgages, again, that's the big thing for me. That's going to be the biggest kick in terms of what the market needs. So overall, I don't think anyone's going to be impacted in a negative way over the next sort of 12 to 18 months and beyond, and I think it's only going to be positive. There's also been other factors as well. So if we look at minor factors which don't directly affect the property market, but they do indirectly, we can see that the vaccine, so you've got an extra £1.65 billion spent on the vaccine. I was extremely impressed. I've actually had my vaccine. I was extremely impressed with the seamless transition of getting a text message, booking it in, getting into the doctors, and actually going through the process. I really didn't expect that for a government-run operation. I thought it was going to be a bit flabby, but I was actually impressed with how quick it is, and you're literally in and out within a couple of minutes. And hence that's why they're vaccinating at the kind of rate that they are. So that's going to be key, because not only does it help people when we go to do viewings, people are more comfortable with viewings. That drives the market on as well, because without viewings, people stagnate and they don't buy. But it's also going to help people moving forward in regards to actually pushing on with actually putting their house on the market, because a lot of people haven't put their house on the market as of yet, just simply because they didn't want to handle viewings. They didn't want people to come in and do pictures. So it's a big thing to actually get people to put their house on the market and push forward. So that's something that is not going to affect us directly, but indirectly, the quicker we can get vaccinated, the better. Again, return to sporting and leisure events. This is key as well, because a lot of our rental market that we've dealt with over the years has been short-term lets using our trademark Skylet account. And this is all done through booking.com, Airbnb, and things like that. So one of the keys to this is getting people vaccinated. And because that's taking place now, we hope to see a return to sporting and leisure events ASAP. And one big thing as well is staycations. Because of the fact that people are still restricted on going on holiday, and we don't know how long this is going to last for, even today. I think I've listened to a report this morning. Matt Hancock was saying that they think that they might do a traffic light system even in more depth than what they're doing now. And at the earliest people can go away is going to be, I think, June the 17th, they're going to review it. I think that was the date. I can't remember off the top of my head. But the key to that is more and more people are thinking, well, actually, I don't want to lose money by booking flights, so we're going to book something here in the UK. That then kicks on to staycation. So people tend to spend more money in the UK, taking family and children away to city breaks as well, going to leisure events. So that could be really big for our Airbnb market. So really exciting about how that's going to go. And again, recent articles in the Telegraph and the Times have again shown the north is the way to go when investing. Now, we do have opportunities in London, but we have to make sure that they're a good 15% below market value, which we have got at the moment. We've got properties in London which are 15% below market value. And again, they're absolutely phenomenal. However, the reality is if you're paying market value in the north and market value in the south, you're going to make more money in the south. In the north, sorry, apologies, in the north. So it's got here that the Telegraph and the Times, the cities in the north and the Midlands where house prices are going to forecast to soar, they were, off the top of my head, they were Manchester, Liverpool, Leeds, Nottingham, I think Leicester was the other one. And in regards to the Times, you've got the boom for house prices amid surge in buyers. And again, what that demonstrates here is if you pay market value, what we've been saying for years, it's the north where you want to go, because you get one, more bang for your buck, and two, people can afford more of the housing up there, because in terms of their rate, in terms of their mortgage rates and how much they need to earn in terms of being able to afford the mortgages, it's a lot easier in the north than it is in the south. Savills has recently changed their predicted growth. They've actually changed it to 28% over the next 5 years. So anyone that's investing now is looking to make 28%. So everything's looking buoyant. Everything's looking much more positive than the outlook was 12 months ago. Even though we had confidence in the market, the actual outlook now, everyone sort of seems to be singing off the same hymn sheet. Whereas before there was a lot of people talking about dips and things like that. Now everyone seems to be saying, no, you know what, for the foreseeable, it's going to be positive. We are always looking at the same thing as we've said before, the legislation side of things, the taxation and the interest rates. And because we don't feel that the interest rates, which is the major player, is set to be changed, anything dramatic over the next 2 years, we feel it's still a great time to be pushing on in the property market. So in terms of you guys, over to you. I just wanted to sort of like, as I say, recap on that budget to see how it affects you. But if there are any questions, I've seen a few come already, but if there are any questions, feel free to sort of type it on the question mark or the speech bubble I think you guys have, and just let me know. So the first one that I've got here is the corporation tax. So I've got here, is it worth, I have more than 10 properties in my portfolio and I do make over 50,000. Is it worth splitting those between two companies? Now, that depends on the cost of the properties. The reason being is if you then move that property into NewCo, so to speak, into another company, you're going to have to pay stamp duty on it again. So it's something that you've got to work out how long you're going to keep this for. If you're going to keep this for 10 years, let's say you're going to keep it for 10 years and you're getting, for argument's sake, again, £10,000 to go round figures, £10,000 in on that, then what you've got to look at is if you're paying 25% tax on the profit of that, then you've got to work out, well, if you keep it 10 years, that's 25 grand tax. So how much is your stamp duty going to cost you? And is it worth doing that now due to the stamp duty holiday? So it might be worth doing it now so you can actually transfer it at a lower amount. But people have done that in the past. They've been hit with stamp duty transferring it things from personal name into company name, and they've been hit with a sudden stamp duty bill out of the blue. So what I would say to you is, it's not something that's an instant answer. You need a thought process on how long you're looking to keep it for, what's the potential liability of your tax that you're going to have to pay, and also what's the stamp duty rate if you move that over. The next question is, in London, what is the project in London? Well, it's a project in Zone 4. It's in Hounslow. You're 3 or 4 stops from Heathrow and 10 stops into Central. And it's cheap. Well, I say cheap. It's good value. It's 300,000 for 1 beds. It's great value. The rental on it is like it is in the north, 4.5 to 5% rental. And I feel that the growth is there as well because you're 100 meters from the tube stop. So you turn out of your development, turn left, and you're on the tube. So that's the key. But if you'd like more details on that, just send me an email. And I'll get that sent over to you. So all my details on the screen now. Next question is, can the North still afford to keep growing? Yes, it can. What we look at consistently is the rate to mortgage to ratio to earnings on a consistent basis, and it is a lot lower in the North. It's much easier in the North than it is in the South. So what I would essentially say is, yes, there is still potential to increase the actual prices in the North. As I say, Savills have been a bit all over the place over the last 12 months due to COVID, and then after that they increased their rate of return. But yeah, I'd say 25 to 30% over the next few years, for 3 to 5 years, should be quite achievable. No problem at all. There's one here. Can you explain the significance of the 1st of October regards to stamp duty? Yes. So come the 1st of October, the stamp duty is going to return to what we were pre-stamp duty holiday. So the rates will be anything up to, this is the base rate, by the way, this is the rate for the your traditional residential buyers. So from 0 to 125, it was 2%, 125 up to 250, it was, 0 to 125, it was 0%, 125 up to 250, it was 2%. So, and then that kept increasing, but those rates will return. At the moment, anything up to 500,000 is 0%. After the 1st of July, anything up to 250,000 is 0%. And then after the 1st of October, anything up to 125,000 is 0%. And then the mortgage rates, then the stamp duty rates, go back to what they were before. Next question. I hope that explained it. If it didn't, as I say, give me a shout on either the number or the email below, and I'll send over each table of where it's at now, what it's going to be after July, and what it's going to be after October. No problem. In terms of the rates of return, have they diminished over the last few years? Well, rents have gone up 2% over the last year in the northwest, but the growth has also gone up, the price of the property. So the problem that we are going to keep seeing is that the growth rates will increase faster than the rental rates. And that just means that your rental income potential, percentage-wise, is going to diminish. So what we say to everyone is people that are saying, oh, I'm going to wait 6 months, 12 months, 1 year, you're just going to cost yourself more money in 2 ways. You're going to cost yourself more money in terms of how much it's going to cost you to buy, and you're actually percentage-wise, you're going to lose. People that I got on 4 or 5 years ago, they're making 9 or 10% on a not on a short-term let, on a normal let, because of what's happened and the way that the market's gone. But people now, you're looking at 4.5 to 5% on average. So Have we missed the perfect opportunity? Yes. However, do we feel that there's still growth and still income to be had? 100%. And we still feel, in comparison to other investment vehicles out there, we still feel that the property market's winning hands down. So look, guys, that looks like all of the questions. Again, feel free to contact me at any point. Jack here is booking in consultations for anyone who's bought, or even if you haven't bought with us, consultations just in regards to the market and how it's looking to go. It's not some form of sales pitch or anything like that, guys. It's just about finding out and digging deeper a little bit into the market. And if you have a portfolio, it doesn't matter if it's with us or not, we can sort of help out in regards to what we expect those properties to return over the next 3 to 5 years. So if you want to get in contact, feel free. If I don't speak to you before, have a lovely rest of the week, and I look forward to seeing you on the next webinar. Take care.